Good morning, everybody. Welcome to another episode of the Investing Bros. It is March 30th here in the year 2023, and we got a great show lined up for you guys today. We're going to take a look at the Bitcoin dominance chart that is creeping towards a resistance level at 48%. But the question is, do we actually make a push towards 50? And we're going to be talking because Gary Gensler has been coming out in the news a lot more. Everything he's doing, is he a part of what's pushing Bitcoin dominance higher? We're going to answer that question and a whole lot more in this episode. So make sure you do not go anywhere. Go ahead and smash that like button and subscribe to the channel if this is your first time here. We are so happy to see you here this morning. I want to introduce my two co-hosts, my amazing co-hosts, starting off with the man sitting across the desk from me. His name is T Shroom. How are you doing this morning, T Shroom?
Well, Tim, I'm doing better than I deserve. I must admit, I'm doing better than I deserve, and I just want to say that today's a good Thursday because yesterday we did something really fun. Tim, do you remember what we did last night?
What did we do last night? We bought our plane tickets to Austin, Texas for Consensus.
That's right. We absolutely did. And before we get into the quote of the day, Piper, if you go over to my screen, we're just going to show you guys a little bit of the stylings of the consensus.coindesk.com website where you can actually procure the tickets. Now, you could, if you go to that website, you'll be paying full price. But if you go over to our Investing Bros show and down in the description, you'll actually see, let me show you right here, you'll actually see that you can get 15% off in the link that you click right here when you use the code BROS. So use the code word BROS. You'll get 15% off. It's a secret code. Okay. Don't tell anybody except the website that you're going to put the code into. But the event is from the 26th of April to the 28th in Austin, Texas. And guys, you're going to be joining the most important conversation in crypto and Web3. And Tim and I are going to be there. We booked our flights yesterday.
Piper's going to be there too.
Piper's going to be there. And we are extremely excited. And we're staying with my buddy too. So I haven't seen him in a while. So it's going to be a lot of fun. Quote of the day was brought to you by Consensus. And it's going to be a lot of fun. So the quote of the day is life is what happens when you're busy making other plans. Now, who said that? John Lennon said it. Do you think that's true, Tim?
Life is what happens when you're busy making other plans. I mean, life is what happens at all times while you're living. So yeah, technically this would fall into that category.
Interesting.
Do
you think that life is the planning or the experiencing of the plans?
Both. Fail to plan to fail. Or as Smay would put it, if you fail plan to plan the fail, you fail the plan.
Exactly.
That's a very deep inside joke that only people who remember Smay are going to really get, because that was a whole rant he gave one time. But we're also joined by Army Piper this morning. How are you doing this morning, Army Piper?
I am stoked, brother. I'm having a great day. I'm enjoying my retirement still. I'm enjoying being a bro, and I'm super excited about going to Consensus 2023 with you guys. So, except I won't be flying out. I'll be driving because it's here in Texas at the capital, the great capital of Texas, which, by the way, is further away than 3 other capitals to where I'm at. So.
You know, don't say that, Piper, like Texas isn't like its own little country. You act like, oh, I'll just whip on over to Austin in my very quick 8-hour drive where I only experienced one state. How many states can you drive 8 hours and you didn't leave the state? I think Florida from Miami, you're getting close.
Definitely
I think it's like
Alaska
7.
And maybe California.
Oh, yeah, California for sure. Is there traffic doesn't count? We're also assuming there's like almost no traffic. Texas.
You go to my screen. Go to my screen. Yeah. So Alaska is half the size of the entire continental U.S.
Yeah, Alaska doesn't count. That's yeah.
How does it not count? It's a state.
You're right. But in this, we're talking about the 48 continental.
So El Paso is somewhere down here. It's not coming up really quickly though.
Further left. Yeah, there you go. Mexico, New Mexico, and Texas.
El Paso. And yeah, so you got Albuquerque here, you got Phoenix, which are the capitals.
And,
Are you saying it's closer to Las Vegas too?
No, Juarez is the capital of Chihuahua. It's a state. Right there.
Oh, okay. So that's how you get away with that. It's not a
Yes,
U.S. state.
yes.
It is a state.
Still a state.
I think the we'll say 4. We'll include Alaska, but the only 4 are Alaska, California, of course, if you're driving north south. Texas, though, I mean Texas, you can drive north, south, east, west. It's the only one that you get in all 4 directions that you could easily drive 8 to 10 hours and still be in one state. Alaska too, though. I guess you gotta keep Alaska. Is there any roadways in Alaska that allow you to drive it like that? I don't know.
Let's take a look.
Well, I don't know if we're that curious. This show's getting away from us. It's gonna be a fun morning.
It's not even geopolitical. It's just geo.
It's just geo.
I'm gonna guess that there's probably not a lot of. Thank you, Piper.
Is that a river or a road right there that we're looking at?
It's a river.
It's a river.
The Yukon River.
You could boat down that river like a highway.
There we go. Yeah. And that would take much longer than.
All right. Well, you can leave my screen now, Piper. I'm going to be looking at maps the rest of the show.
That conversation got away from us. Good stuff, though. I did ask in chat, and I want to find out before we jump in and do some TA and do some crypto stuff this morning. I asked in chat a poll. I said, who would win in a boxing match? And we already have 36 votes. We need more votes for sure. Who would win in a boxing match? Gary Gensler or Jerome Powell? And I want to. It's overwhelmingly Jerome Powell at the moment. And here's what I'm kind of thinking. I'm kind of thinking this is closer than I think people are saying it is, because Jerome Powell's clearly got the reach. Gary Gensler's not a very large man. Probably doesn't have very large arms. Jerome Powell's going to have the reach on him. But Jerome Powell's a little up there in age. And even though Gary is too, I mean, Gary's no spring chicken himself. He looks like one of the people that is a little more wiry. Like he's got a little more, he's got more energy than Jerome Powell. So I'm going to ask you, T-Shirt, who's winning in a boxing match, and would you pay to go see this, Jerome Powell or Gary Gensler?
I think you got to give it to the Powster, Jerome Powell.
So you're going for reach.
Yeah, that's right.
Well, but fun fact though, Gary Gensler's lizard tongue is 5.5 feet long. So
didn't think about that. That's a good point. So do you want to change your guess now?
I don't. I'm sticking with the Powster.
Okay.
The
problem with the fight with Jerome Powell is the minute he doesn't understand what's happening, he's going to look down at his reports to try to answer the questions better.
That's right.
And that's when Gary's going to pounce.
That's right.
And in Gary's corner, he's got Elizabeth Warren telling him, if you don't win this fight, you're out. So he's fighting for his life.
Yeah.
Because he's scared of Auntie Beth.
But Jerome's got the dual mandate, baby. He's got the 1, 2. He's got the balance sheet. He's got the interest rates.
Wow.
But John Kahn makes a good point. Gary Gensler is an ankle biter. So
Gary Gensler's an ankle. That's true.
It's true.
It is
very true.
Also, here's what I want to say about Gary Gensler. We're going to talk more about this later, but you got to say this about Gary. He is trying to add jobs to America. 170 of them for $2.4 billion. So I might have to put my application in there. I'll defeat the beast from within.
There you go.
And I'll go work for Gary Gensler in the SEC. That's a lot of money. 170 jobs for $2.4 billion. I know there's other technology going in there as well, but we'll cover that story more here in just a second.
Oh, that's interesting. Who would you rather work for?
Who'd you rather work for, Jerome Powell or Gary? Well, maybe tomorrow on our last show of the day. Let's go ahead before we jump in. Oh, we got to do names. I almost forgot the names. I almost forgot the most important thing.
I was going to ask you about that.
Oh, we were sure to have some technical difficulties if that had happened. But let's read some names of people here in chat. First of all, we got to give a shout out to Yair Navarro, the first commenter of the day, despite the fact that several other people below him said that they were first. So this begs the question, did Yair Navarro find the same bot that others were using earlier? Who won yesterday? Was it Eric Wallen?
It was Al Bundles.
Al Bundles. We've accused Eric Wallen and Al Bundles of using bots. Seems like Yair Navarro found the bot.
It's hard not to, though. But it's not like we're crying wolf. They really are lightning fast. And
they're good.
If you're not using bots, then you know and you feel proud of yourself.
Yeah.
Okay. But if you're using bots, that's fine too.
Yeah.
Speaking of, commend that.
Right behind him was Al Bundles. So his bot just was a little slower this morning. But those are the first two comments. We got Joe Nickel is here. Jay Encar is here. Eric Wallen is here saying he fumbled. Yeah, the bot just didn't turn on this morning. That happens from time to time. Let's see who else is here. Mr. J is here. John Kahn is here. Cryptex with the blue wrench. Elliot Locke saying good morning, peeps. And I guess I missed Elliot yesterday. I thought I read Elliot's name yesterday, but he let me know that I didn't say it. So 2 shout outs to Elliot Locke. for today and yesterday. Let's see who else is here. Alton Henderson is here. The investing bros are here. There we go. I'm never close to the top though. Let's see who else do we got here this morning. Crux of Crypto with the Blue Wrench is here. Mike Play is here. Let's see. A lot of comments from same people. Gia S is in the building. Ninja Glock is here. Justin Eubanks, Wind Peoples. Let's see. Crypto JMP, Crypto Trades is here. Bob and Crypto Mini Bike are both here. Cryptex is here. Although I think I did his name earlier. Oman13 is here. Good morning to you, my friend. The classic IT guy is here. Mike Lowry, CBD Suddy. Let's see, get a couple more here, and then we're going to go and wrap it up. The Crimson Caravan Company is here, and Austin Patrick. Thank you to everybody who is watching right now. Go ahead and smash that like button. And if I didn't read your name, it's not because I don't love you. It's because it's time to go ahead and move on with the show. But thank you to everybody. We want to start off, as we mostly do here more recently, with our macro outlook. And there are a couple of very interesting things happening, I think, not only today, but over the next couple of days. So, Piper, what are the big updates in the macroeconomic outlook?
All right, Tim. So this morning we had some data come out. The big one this morning was going to be the initial jobless claims. It was consensus on it was that it was going to be in at 196,000 jobless claims. So this is people that have filed for unemployment in the past week. 196,000 was what the consensus was. Forecasted to be at 193,000. Actually came in at 198,000, so higher than expected. Up 7,000 job losses from last week. So normally, you would think that this means, hey, it looks like, we're losing jobs. People are going to panic. No, it actually means that the market start to get a little bit heated up and start going up a little bit, and the Dixie goes down. So going to be interesting to see how that plays out today. I'm going to be watching my charts closely, of course, like I always do. And but that's what we came in at, 198,000 jobs there. So other data that came in today, GDP price index quarter over quarter came in at 3.9%, right as expected on forecast and consensus. Previously, it was at 4.4%. So not too bad there. Prices coming down a little bit on stuff. Tomorrow, be watching inflation rate year over year for the European area. It's going to be the flash inflation rate. It's currently at 8.5%. They are expecting it to be down at 7.1 to 7.4. And we are seeing similar to that with Germany already today. They came in, I believe, at 7.8%. They combine all those totals, average it out. And that's what we'll be seeing right here tomorrow for the European area. And then lastly, big one tomorrow for the U.S. core PCE price index. This is a very detrimental calculation in the entire inflation picture. So this is what everyone's going to be looking at tomorrow. Consensus is 0.4%, forecasted to be same as it was previously, neutral. We will see how that comes in tomorrow and see what the reaction from the markets is when that comes in, Tim.
Sounds awesome. We did just get a super chat from Elliot Locke saying, can I get T-Stream to check out these stocks? I did that wrong. Can I get T-Stream to check these stocks out if y'all have a sec? Kinder Morgan, KMI, Energy Infrastructure, and Plug Power Incorporated, Plug, and Hydrogen. Love ya. So, yeah, we get a second here at the end. So we'll do crypto TA, and then we'll jump into our market open. And if T-Stream can check those out and see if he sees anything happening over there. I did want to go ahead and go to my screen here, Piper. Wanted to kind of update you guys on this morning. Not a lot's happened. We're down to 51% for a pause here. So that means we're getting closer to that 50-50. Are we going to see 25 basis points this next May FOMC meeting? Are we going to see a pause? So we're going to keep our eyes fixed on this for a while. The end of December is starting to creep back up after kind of falling back down to the majority believing that we're going to end the year between 4 to 4.25. Right now, the leaders, the two bigger ones, are going to be between 425 and 450, and then 450 to 475. Either way, both of these go against what we heard Jerome Powell announce that the Fed is expecting, that they're going to end rates between 5 and 5.25. This Fed interest rate tool predictor, they're only giving a 2.6% chance that we end the year the way the Fed is saying we're going to. So this is still going to be a very, very long year and a lot of changes happening over here. Got to kind of watch what the banks are doing. Are banks crashing? What's happening with other currencies? Is the dollar just plummeting? And are we forced back into a spot of quantitative easing? We'll keep you guys posted on that. Let's head over and take a look at Bitcoin. This is the 1 hourly chart. I'm going to start off down low, and then we're going to go move up on the time frames here. Last night, I think a lot of people probably got shook out by this. It is not a bull trap just yet. I mean, if we go ahead and crash, maybe this was a bull trap. But we've been talking about this little trading channel that we have been in now ever since back here. Technically, we were setting support on it back here in March on the 18th. I guess it's still March here. So just a couple weeks ago, because this is the hourly chart. But we've kind of been trading in a range between 26,600 all the way up to about 28,900. This has been a nice little channel that we have respected for the last couple of weeks. Well, last night we shot up and we got back over 29,000. And I'm sure a lot of people were saying, here we go, 30,000 coming very soon. But then we came right back down. You guys see this is the 1 hour chart. This hourly chart right here, that hour candle shot up. Next hourly candle shot back down, getting back down as low as 28,100. The question is, what do we do with this? The fact that we're back up and we're hovering in this yellow box, the higher resistance level, this tells me I'm still in a camp of saying I think we're going to the upside. And guess what one of the problems were more recently? One of the reasons why we kind of had paused back up here around the 28,400 level, we were wicking out around 28,600. This is because we got to a place where it wasn't that people wanted to sell off their Bitcoin. It's that liquidity is just not that strong. That's not a lot of liquidity left in the space right now, especially with all the banking chaos going on. So the fact that we wicked all the way up to 29,100, this is good news for the bulls in the short term, because we just at least got ourselves liquidity all the way up to 29,100 and some change here. So that's a good sign for the bulls. Another reason why that level is significant, 8,600, the level we're kind of operating at a lot right now. I got to go all the way back over here to this price right here. This is technically 28,800, but that's the wick that we had. Do you guys remember, those of us who were in the market back in June of 2021? This is the time period where after hitting our all-time high and everyone was so excited because Elon Musk was the big advocate of Bitcoin. Well, he announced that he was very concerned about the environmental impact, and this started what a lot of people thought was going to be a bear market. Of course, ended up being just a downside with sideways price action that looked followed a lot of the principles of Wyckoff accumulation phase. But we got down as low as 28,800, give or take. That level is key because now it's being used kind of as resistance. We did poke through it last night with that wick going down the hour. We did poke through it, but we cannot close above it for now. Watch this be another step in the right direction of going to the upside. Now, you guys saw when I was zoomed out there, there's a lot of the things I have on my chart right now. There's some other levels I'm watching, and I want Piper to tune into this in a second. I actually might throw it to you here, Piper, for a second, and then I'll get it back from you. When you're looking at Fibonacci from the all-time high down to what is right now the bottom of the bear market, and I do want to discuss that a little bit this morning. I talked about this yesterday on around the blockchain, but I could not show my chart. So I want to show you guys my charts, what I was talking about, those of you who watched ATB last night. Right now, on this more macro outlook, we just turned the 0.236 or the 23.6% Fibonacci level into support. Let me go back down to the hourly chart. Let me show you guys. It's that red line. I didn't draw this flat red line. That is the Fibonacci level, and you can see that we've gotten back above it and actually been using that level as support. That is a very big sign. But there's another reason why that's a big sign, and this is why I'm going to throw it over to Piper for, because on a shorter time frame, we're also wrestling with a platinum pocket. So Piper, I want you to take that one and show everybody what you're looking at on your chart.
Absolutely. So first off, we've got a couple of things going on here with our predictive ranges from Chart Prime's predictive ranges indicator. And we got a perfect rejection on that $2,900 wick up last night on the upper resistance line of that predictive range. And then we retested the upper trade band. So big volatile candle move there, testing support and testing resistance there. That's one thing that I want to point out. The second one you just said, I got a little bit better picture here on it. That wick down that broke that upper trade band actually did, 236 to the T, like right there perfectly. But what I'm really looking at closely is right here, and I'm going to go ahead and turn off the Smart Money Concepts bundle here, and we're going to bring this into scope. So you can see here that back here on the 28th of March, we hit to the dollar on the retest of the upper band of the golden pocket. Once we bounce from that, what we're fighting with right now, and it was previously resistance there, this is back on the 22nd and the 23rd of March, is the 786 of the platinum pocket. If we keep dancing on this right now, like I said, like if you look here, we've got the 236. If you look here, we've got the gold lower trade band. If we can get above this platinum pocket 786 here, and we get that bounce there, hit that resistance band, maybe break through it and test it as support, then we're heading up to that 887 there, and we're going to be inside of this platinum pocket. It would not surprise me if we trade between the 786 and the 887 back and forth for a couple of weeks, just as we're retesting the 786 as support, since it has been resistance so much. So that's what I'm going to be watching for. I think once we break the 786 here, which is currently coming in at 28,773, I think that we're going to be seeing that new range of consolidation inside the platinum pocket, and then that's going to give us a top side of about $30,500. So
interesting. One of the things I want to mention to people as we're talking about Fibonacci, if you guys don't play with this yourself, you can go back to my screen now, Piper here. If you don't play with Fibonacci, you absolutely should, and you're going to notice a lot of similarities. This whole thing is based off of the fact that markets and the way people think and respond to price action is cyclical. There's just these levels. We like the standard deviations. We like those levels. And you'll notice, these things keep changing. If I were to go to all-time high down at the bottom, let's keep the bottom at this point down at 15,500 or so. Let's keep that at the bottom. But watch some of these similar price levels. Like right now, we're wrestling with the 236. If I were to move this down to the peak that we had back last March, a year ago, almost to the date, you're going to notice we're wrestling with the 0.382. It's still almost the exact same level. We're just shifting it down. Same thing. If I were to move down to the peaks that we had that he was just talking about, that Army Piper was just talking about, the peaks we had back in May, now we're wrestling with the 0.786, what we call the platinum pocket. It's just really cool. This just gives you more validity. This is why Fibonacci retracement is so important, because it just deals with the cyclical nature of price action and can be one of the most lethal tools you have in your trading toolbox when looking for certain price points to either enter or exit the market. So sticking on Fibonacci, because I want to kind of camp out here for a little bit. This is what I was talking about last night. And this is just another thing that you guys can add to your toolbox of saying, hey, here's a reason why it would make a lot of sense for a bottom to be in. This started off with a conversation, and I know I'm not showing you anything, but I'm explaining, kind of setting this up. Gareth Soloway, a technical analyst that I heavily respect. He has a lot of experience in the space, a very, very smart man, has been out recently talking about how he thinks that we still have lower to go. I think he's mentioned numbers like 13,000. He's even said there's still a potential down maybe to 9,000. Of course, this is paired with several other technical analysts that I heavily respect who still are holding out. We might see something along the lines of maybe a $3,000 Bitcoin. What I'm looking at right here, there's a lot of reasons to believe that the bottom is already in, but I want to show you guys even more of a reason why I think the bottom is in. I want to do something that I've seen a lot of technical analysts use and kind of express why I disagree with others and why I'm going to use Fibonacci and say that I think the bottom is in if you look at past bear markets. I want to go to the log chart real quick. This changes everything up, by the way. When you're on the linear chart, log chart, it changes all your lines. A lot of people, when they're going back and they're looking at these things, they're looking at the log chart. As you can see right now in the log chart, we're retesting and using support the 0.382 level. And I'm not going to take that significance away. I think it's very significant to take a look at the log chart from time to time. Use Fibonacci on the log chart. It is still extremely helpful. The problem is when you compare this chart to past charts. So let's just do this. I'm on the weekly chart here. Let's scroll back to some past bear markets and see what's happening here. And in fact, I actually don't even want to use it right there. What I want to do is scroll back even further and go from the bottom of the last bear market to the top and see where we currently are. All right, so that's going to be way back here in 2018. We go up to the more recent all-time high. You're going to see that we came down almost perfectly touching the 0.5 level. All right, so this is important because people are going to come here and look at this and say, all right, this is going to be important for future bear markets. Let's take a look at the next one. Let's scroll back here and go to the bottom of the bear market that we had back here in 2015, all the way up to the all-time high of 2017. All right, so same thing. Let's take a look here, bottom to top. You're going to notice that we bottomed out on the 0.382. So already we're seeing some differences here on the log chart, but it gets even more detailed than that. Let's scoot this over so I have my other one as well. Let's go back to the bottom of the bear market that we had back here in 2011. This is going to be the last one we can really look at because we only existed in late 2008 to early 2009. Let's go from this bottom of 2011 up to the top we had in 2013 and look at what its price action did on the log chart. Would you look at that? On the log chart, we kind of hovered somewhere close to this 0.236, but we didn't even make a push all the way down to 0.32. So as you can see, there's not necessarily a lot of similarity here. If anything, the argument would have been the bottom of this bear market should have been around 0.382, closer up here to 21,152. That's not really a lot in common. You're going to see some people say, oh, here we go. We're going to go down to the golden pocket. That's the $10,000 price here on Fibonacci. That's what we're looking for, that golden pocket on the log chart. But this is where I just told you guys earlier, things are different when you're looking at the log chart versus the linear chart. And if you're going to use past analysis and past bear markets to make an argument, you want to find as much confluence or similarities as possible. So watch what I do by just clicking this little button and turning us back into the linear chart. What did we just do in this more recent bear market? Can I move this over? Thank you. We came down, we crossed down into the platinum pocket below the 0.786. We ranged down there using as resistance, and then we moved back up. Let's go to the past bear markets. And you're not watching me, I'm going to have to keep auto adjusting this. Let's look at this bear market on linear chart. What did we do? We came back down, we crossed below the platinum pocket. We didn't get all the way down to the bottom of it, but we ranged sideways using as resistance, and then finally broke through. Let's go back to this bear market. What did we do? We came down, we got into the platinum pocket, did not quite get down to 0.87. We ranged sideways. Technically, we broke up a little above it, but we ranged sideways right here in the platinum pocket, and then finally we broke through and never looked back. Again, is it possible? Is it possible that we go lower? Abso-freaking-lutely it's possible. But when I'm looking at past bear market action and price action, and I'm using the Fibonacci tool, there is way more in common there's way more on the linear Fibonacci levels in common than there is on the log chart. So anyone using the log chart to compare these, you're going to find a lot of things that are just up in the air and a lot of I don't knows. But when using the linear chart, it looks like we are following almost the exact same trend. So for anyone out there who's wondering, hey, why is Tim still so bullish? Why is Tim, despite the fact that other analysts are calling for lower, why does he hold to his level? I'm watching this. I'm watching the Fibonacci levels, and I'm also watching, I've told you guys before, and I feel like I'm beating a dead horse with a stick, but I just want to really hammer this home, the similarities of what happened back in 2019 to what we're seeing happen right now. It's just absolutely uncanny what we're seeing. I'm still looking for, especially based off of the news and the sentiment we've had recently, an explosive move in Bitcoin. This is also where I think Gareth is right, but I just disagree on price actions. Part of the reason why Gareth Soloway is calling for a $13,000, $14,000 Bitcoin price still is he believes that there's a lot of chaos right now with the banks, but there will be some comforting. There will be what Bill Noble called yesterday the everything's all right trade, where it's a lie, but everyone thinks that the economy is doing fine, and there's going to be a 50% runoff of Bitcoin. Well, yes, right now at 28,500, a 50% dip would bring us down into the $14,000 level, right? The reason I agree with Gareth Soloway is I do think a 50% dip is coming. The difference is I believe that similar to what we did in 2019, we're going to make a run up back to the golden pocket of 48,000, 50,000, this area right here. And then guess what? What is 50% of 50,000? It's 25,000. What else is about 25,000? 25,200 was the key last level of resistance of the bear market before we broke it and turned this back into a more bullish trend. The same exact thing we did back here in 2019, where in 2018, we set that level of resistance right there at 6,500. We broke down, we broke above it, had our run up to the golden pocket, and then a 50% reduction back down to that exact same level. I think that this is a case when you're looking at the linear charts, we are seeing a little bit of history repeat itself. And it might not be perfect, and I'm probably not going to pinpoint every single number the exact way, But this is a very, very real thing in my book. I do think Bitcoin is about to make its move. And that transitions me. The last thing I want to show you guys here when it comes to Bitcoin is taking a look at the Bitcoin dominance. And we're going to talk more about this with Gary Gensler. I have some thoughts on that, but we're going to cover that news story. But right now, Bitcoin is getting back. This is Bitcoin dominance is getting back to a very key resistance level that we have been wrestling with ever since back here in July of 2021 with a falling trading channel. We are back up at resistance right here. And this is something to watch as we are approaching 48%. Do we make a push up above it? We've had plenty of touches here. At this point now, we've had our 1, 2, 3, 4, and then this fifth move. A lot of times that fifth move is the one that actually makes the breakthrough. We might see something along the lines of a Bitcoin push up here, quick bring back down, and then a shoot to the upside. Maybe I was probably a little high towards 50,000, maybe a little bit above it. And then later this summer, that's when we see as Bitcoin falls, the dominance keeps climbing. Later, actually the fall is when we'll see the altcoins actually start to take dominance back. That's another reason why I think that we see an explosive Bitcoin rally here in the next little bit. That's not a bull run, is because bull markets actually end up having altcoins outpace Bitcoin. Right now, we are watching Bitcoin outpace altcoins. Do not be surprised if we see, just like in 2019, an explosive Bitcoin run that's met with a 50% reduction that crushes the retail spirit, only to delay. And we're going to watch a lot of things crash, and the real bull market starts late 2023, early 2024. That is all I have for you guys here on Crypto Technical Analysis this morning. Get ready for next week. It's going to be awesome. And if you guys have not heard about this, I want to make sure you guys know about this. There's only so much you can cover in a 60-minute show. That's what we currently run. We run 9 to 10 a.m. Eastern Standard Time. I know you guys love it, but we try to do a lot here. We pride ourselves on not only being a very genuine and a very generous community. By the way, we have an announcement about that coming out very soon as well. Some really cool stuff happening there. But we really like to cover as much as possible. We don't just want to do TA. We also want to cover the news, but we don't just want to cover Bitcoin. We want to cover as much crypto as possible, but we don't just want to cover crypto. We want to cover traditional finance as well. Stocks, oil, metals, I'm blanking on words there. And there's only so much you can do within a 60-minute show. So on Monday, we are moving to 90 minutes where we will engage more with you guys in chat, also looking at more trading opportunities of altcoins and other projects that you guys are going to help us choose what to cover. So if you're excited about that, go ahead and smash that like button. Comment in the chat right now. With that said, it's 9:32 though. I want to throw it over to Mr. T. Shroom to give our market open for the day and maybe take a look at some of those coins that Elliot asked about a little bit earlier.
Yeah, absolutely. Well, before we do that, I want to just remind you all that there's a big event coming up. We talked about it in the intro of the show. Tim and I bought our tickets to Austin for the April 26th through the 28th event known as Consensus. Guys, we're really excited about this. Won't go into too much detail here, but you can see right here, you can save 15% off by using the code BROS by clicking the bottom link, the very last link in our description today. You're going to love it. Let's go ahead and get into the market open here. And yes, I have Plug and I have KMI pulled up to look at a little bit later.
Sweet.
But let's go ahead and get in the market open, guys. Cut to the chase before we even do energy. The indexes are up, and they're up markedly. They were up a little bit more right at open, but they're up here. NASDAQ leading the way, up 0.8, and the Dow Jones lagging, up 0.5. So a slight move, a slight rotation into risk and security lagging, but still up. Okay, oil up 1.1%, peaking back up. Let's actually take a look here at the oil charts. Yeah, so oil kind of creeping back up and is already back up to $73 per barrel. That was not long that it spent down there in the 60s. It came right back up. Very, very interesting there. Natural gas had some upside yesterday, but is now back down. We're going to take a look at the ETF UNG. Yeah, absolutely. Going for putting in newer lows here and is very well within Chart Prime's discount range here. So on the smart money concepts discount range for natural gas. It's a complicated commodity, natural gas, because it's so heavily subsidized and there's a war on. So there's all kinds of different dynamics that are playing a role. You're seeing a lot of green here on crypto. Well, who's red is Matic, Cardano, and Atom. Atom leading the way lower, down 2.5%. Also Litecoin and Link red, not not more than Atom there though. XLM making a comeback, kind of on the tailwinds there of XRP's tear to the upside. Cake is green, Optimism Chain up 2.1%, and Bitcoin up 0.8, and Ethereum up 0.6, and BNB up there 1.2. So very interesting movement to the upside for the majority of cryptos on my watch list. Metals, silver up 1.4% and gold up 0.1, kind of undecided on the morning. But silver has been making a tear here, guys, moving up, trying to break back through this line of resistance that it has failed to break through. It's wicked through 3 times, or wicked up to 3 times. And these are weekly charts, just to keep in mind. But we'll see if silver can push through. But I have a feeling a lot of the alternative liquidity is looking for Bitcoin and more so gold and less silver. All right, looking at your mega cap tech stocks, you're seeing green across the screen, except for Meta and Google. Google actually down 1%, while Microsoft is up 1%. And then you also see what's else is standing out. Not really much else standing out. Amazon up 1%. Let's take a look at Amazon's chart. We don't really look at it too much. So it peaked into the discount range there of the smart money concepts and has not returned since, putting in higher lows ever since then. Again, this is the weekly charts. This is going back. It was in the discount range right at the end of 2022 and has resumed upward. Yes, I'm very zoomed out for a reason, though, guys. We'll get to that in just a second. Your bond yields are mixed. The younger bond yields are coming up today, while the older ones are generally selling off. And not selling off. The yields are coming down on the 20 and 30 year. All right. And then nothing much else to see there, except for Bill Noble mentioned this index yesterday, MOVE, which is the volatility index for the bonds. I mean, it's down today, but I'm not going to try to interpret that because I haven't gotten my head around it, other than I would say that volatility is generally down, I guess, if it's down 3%. It's similar to the VIX, which is all the way back up here. We got to climb. The VIX is the volatility index for equities. And the volatility index, I won't get into detail now, but it's exactly what it sounds like. It measures volatility. So when there's a lot of volatility in the market, it goes up. It can be used as kind of like a short for the market in general, but it shouldn't be thought of in that way theoretically. Only it works in theory, but does it work in practice is the question there. All right, cannabis up generally, green, nothing really to see there, but your micro cap stocks are actually doing pretty good, or your mid cap, are actually doing pretty good, with Ginny up 6%, and then the rest of them all doing really well, except DraftKings down 0.5% there. And then also notably C3.ai up, so that AI narrative not giving up, still showing some signs of potential movement to the side, although you are seeing a third potential lower high. So not super great for C3.ai, also putting in lower lows on a way down. All right, moving into big banks. The big banks are green this morning. And then your oil producers also are green. So very interesting market open this morning. Generally, you're seeing the market get bought. And that has a lot to do with the way that it's perceived that the Fed will interpret those jobless claims numbers that Piper read to us this morning. All right. Well, we had a call, super chat for a couple of different stocks, Plug Power, and also I've done a little bit of research on both of them, and I have some notes here pulled up on my other laptop. So I'll go ahead and just generally...
Real quick, I think you're good now. You'd frozen. I think something happened with our Wi-Fi. You were frozen there for a second.
Okay.
Yeah. You're good now.
Everything good, Pipes? Nobody calls him Pipes. Piper. Can you hear me? Uh-oh. Well, it's good that you can't.
I can.
Oh, you can.
He just mutes himself on that.
Okay,
one.
gotcha.
All right, I think
all
we're
right.
good.
Okay, so here we go. I'm going to try to make this short. You can hear my voice. I don't know if I'm confident about making this short, but we'll try to make this short. Here's Kinder Morgan, guys. It's an old company, and they install pipes for natural gas movement. So I'm guessing that who is it that put the super chat in for this one?
I think it was Elliot Locke.
Elliot Locke. I'm guessing that you got these stock tips, or these came up on a stock screener or something like that,
Mhm.
I would say one of these is, I mean, it also depends if you're wanting to trade these or invest in these. I'd say one of these is definitely a lot better of an investment. But it also depends on what your goals are in investing. So I'm going to just cover all those bases very quickly. I'm going to try to. Let me pull up Plug here as well because I accidentally moved away from that one. But let me just say, I'm going to start off with the conclusion. I think Plug is not as good of an investment if you are over the age of 45. Or yeah, let's just say that, right? Because I think that this one, Plug, is it's a higher risk asset. They are trying a lot of innovative ideas, right? And some of them are statistically they're probably going to fail. By ideas, I mean business models and products. Now, you had a lot of movement to the upside here for the same reason that Bitcoin and Microsoft and NASDAQ and a lot of other very small tech projects have also had movement to the upside. And that was the free liquidity from the Fed, right? That has now come to an end. So it's in question now whether or not a company like Plug Power can actually do well. I know they also had a huge rise in tandem in correlation with Tesla because they were going to sell batteries to Tesla. I don't know if they closed on those contracts or how well that went or if they lost. I don't know. But I mean, based on this stock price, it's definitely moved with Tesla's swings and it hasn't returned. It's only put in lower highs and really printed lower lows. So I would say from a trading standpoint, you're going to have a much better experience with Plug Power because there's much more volatility. Also the trends are going to be like the media pops are going to be a lot more apparent to you. They're going to be a lot more pronounced. Whereas with Kinder Morgan, you're going to have to track the supply of natural gas and also the government, the United States government, but it also looked like the Chinese government plays a big role in this stock name because they have exited the Canadian market. So you have to track like what are the governments are they looking to approve more zoning for pipeline distribution? So, I mean, if that's the game you want to play, if that's what you want to get into, that's fine. If you have a trusted source that is in the natural gas industry and just knows that this is a good time to buy Kinder, then that could also be a good reason to invest in this. From a trading standpoint, yeah, you have a potential trade to the upside here, but let's see how much it is percentage wise. It's 10%. That's not terrible. So you have a nice little upside potential here, and then it's 28% all the way to that premium range there on the Chart Prime Smart Money Concepts indicator. But it's like there's just not as much volatility as with Plug Power. So
you know what's crazy though is
how fast I burn through time.
No, that was really good. I think you're right about the more macro stuff. You're looking at the weekly chart. Go to my screen, Piper, real quick. There is something I want to show you guys, though. And this is something I talked about in that video I made for Chart Prime about when you're trading in a channel, when you're moving sideways, you're neither really bullish nor bearish out on this weekly chart. This oscillator is absolutely lethal. Just look at some of the back testing of some of these signals being called that you could have traded based off of. The bullish ones are a little bit better. But what I'm looking at right here, T-Shroom, we just had, not only are we kind of ranging right here with a flat level of dynamic reactor, meaning, yeah, for sure we're in a sideways trend. We just bounced off that bottom gold band on the predictive ranges. We just got a double flash, meaning an oversold and a green reversal triangle coming in at that level. This is a chart right now until it breaks in a certain direction. Let's put it this way. Long-term investment, I think you hit it right on the head. Very sideways ranging, not very volatile asset. For traders, though, especially scalp traders, day traders who just want to make some money, this is at a spot right now when it's trading sideways. It's actually pretty easy to make calls of where the bottoms and tops are going to be.
Okay.
So traders probably right now are loving what they're seeing on Kinder Morgan. I think long-term investment, you're right, though. Plug looked like a better chart.
I love this, Tim. I think that we could potentially, I know we're about to expand 30 more minutes to this show, which I'm really excited about.
Yeah.
We're going to be doing that starting next week, right?
Yeah.
What we could honestly do is like trial kind of like a antique roadshow segment for, if you will, where people can just kind of throw us assets and we, Piper and I mean, we could all just kind of take turns. It seems like I'm a little better on like the macro side and you guys are good on like the TA. Because I mean, I don't think I would have, we're going to be able to cover each other's strengths and weaknesses and stuff like that. But overall, guys, another major thing to point out on Plug versus Kinder Morgan is Plug has not been profitable yet. So Plug, again, I'll come back to they're a start. they're definitely not a startup, but they're much closer to a startup than Kinder Morgan is. Kinder Morgan is a staple in the natural gas and oil industries, right? They've been distributing energy for a long time in the United States and other continents as well. And they've been in profit for a long time. That's why they issue a 6% dividend. Now it's 6% on their share price is $17, right? So it's not like a ton of money, but 6% dividend on anything is usually signaling to the market, hey, we are not looking to grow in any kind of way that would expose us to risk. We're looking to really just sustain and grow where we can, when we can. Whereas Plug Power is aggressively drinking energy drinks every single day, trying to grow, trying to get stronger, no matter what the risk is. Yeah. So you kind of think about it like that. I don't know how much I drilled in for you, Elliot Locke, to give you good information here, but I think I would be careful. To be honest with you, I would be careful with Plug. Plug was definitely a hype stock in this last cycle in the Nasdaq. I would be, Kinder Morgan is almost kind of a snooze. So I would be, if I'm you, I'm looking more somewhere in the middle of these. Unless, again, I don't know how old you are and what your risk tolerance is, but if you're getting along in age and you're thinking my risk tolerance is getting lower and lower, then Kinder Morgan might be a good idea for you because of that dividend that it yields. And this has been our Antique Roadshow segment. I think you've got a really good piece here. Okay, I think if you wait a little bit longer, you can get a better appraisal on this. But the natural gas.
My dad used to love that show.
I like it too.
I watched so much that just because my dad had the remote and that's what we would watch.
So there you go. A lot of people don't know this, but my mom actually watches a YouTube version of Antique Roadshow. So there's this lady, and I'm sure there's a lot more people like this, but there's this lady who just does exactly that. People like go to her. She rents out convention centers. People go to her, and there's other people like her. Anyway, it's funny. There's a whole little cottage industry around.
That's pretty funny.
That's taken the Antique Roadshow model and really ran with it. Well, guys, we're green on the indexes. We're generally green on crypto. We've done a couple deep dives in this unique segment of Antique Roadshow Investing Bros style with looking at Kinder Morgan and Plug Power. And we've made some interesting conclusions here based on 30 minutes of educated research. But let's go ahead and get into some of the stories here. So staying on my screen, we'll start with this XRP story, which is that XRP is trading volumes has surged to billions of dollars on South Korean crypto exchanges. Now, some of you who have been in the market a while will be familiar with the kimchi, buzzword. So we're going to get to that here in just a second, into the details of that in just a second. Trading volumes for XRP spiked to billions of dollars on Upbit, on BitHub, on Corebit, three of Korea's top exchanges by volume, on the back of the token's 26% rise in the past week. In the past 24 hours, XRP trading made up 37% of all volume on those exchanges, which is pretty remarkable. South Korean traders are infamous for pushing euphoric rallies on tokens. Excuse me. The so-called kimchi premium originates from the region where prices of Bitcoin on local exchanges can trade at a premium of as much as 30% compared to international counterparts, driven by local demand. Now, who was it that famously traded the kimchi premium that found that? It was somebody like
Abraham Lincoln.
Yeah. No, I think you're right, Tim. Yeah. I think that is who it was. And I really appreciate that helpful, not sarcastic comment at all to my very serious question. The interest in XRP comes amid speculation that the token might be classified as a commodity by the US CFTC, after the CFTC claimed Bitcoin and Ether as commodities in a lawsuit against Binance. So again, we talked about this 4D chess yesterday. Maybe we'll get into it a little bit later in the show. This, in turn, may hurt the U.S. Securities and Exchange Commission's case against Ripple, in which the regulator claims that XRP tokens are securities. Classification as a commodity could mean Ripple wins the case, which some traders consider bullish for XRP. I think all traders would consider that bullish for XRP. Yes. Thank you, Piper. That is really, really a good kind of highlight accent to this story. Yeah. So that says it well. And this is the first time that I'm reading in print that thesis that we brought up yesterday, which is that the CFTC is actually looking to go ahead and cement crypto as a commodity, which is favorable, generally favorable. Traders consider that bullish. And this would happen in the XRP. I guess, well, it wouldn't happen to XRP. This would be happening to other altcoins, or I guess Binance in general.
Mm-hmm.
So it's complicated, but this could be precedent. All right, moving on. Unless you guys had any comments on that.
I would say one thing about XRP to remind you. You can go to my face on this one, Piper. Remember one of the biggest FUD things about XRP. And yeah, there we go. One of the biggest FUD things about XRP, and I used to be in this camp. So this is me explaining to you guys what I used to think about XRP. It used to be kind of termed as the banker's coin. Mm-hmm. People thought it was the enemy of crypto, that it was going to support these banks and it's going to be the enemy of decentralization. Stay away from XRP. It's evil. I was one of the people that held this view until I was educated on it. Mm. Another reason that you should be really bullish on XRP is because while that's a bad way of thinking about it, that it's the banker's coin, what it does do is it does give power to smaller banks. And the best way to almost think about it, of it being a banker coin, and this has a good thing, is it actually allows smaller banks to compete with bigger banks in terms of liquidity, in terms of speed, in terms of exchanging. So that's another thing to keep an eye on with XRP. We don't just have the potential win against the SEC as being a catalyst for why it does so well, but in a world where banks are crumbling, and especially smaller banks are very, very worried about their ability to continue to deliver for clients, watch XRP, not only because I know there's been rumors about them partnering with Swift to help exchanging, but also watch these smaller banks in trouble turn to things like XRP to help them out. Just one more reason why XRP, another reason why I'm super bullish on it. I heard someone the other day say something about a $30. I think Piper said his super bullish look is $30. I don't know about $30 for XRP anytime soon, but I absolutely think we could hit a new all-time high very soon with XRP.
Hey, don't crush my dreams.
Crazy. I'm not going to try to crush your dreams. Let's wait until maybe 2030. Maybe 2030. Let's call it 2030, $30 for XRP. 2025, let's go with 10. I think $10 for XRP is not a ridiculous
$10 works for me. I can go with that.
We'll go with that one for now. T-Shim, you can carry it away though and continue on with the stories.
I appreciate that, Tim. I'm just gonna read the title on this one. Russia postpones launch of digital ruble. This is an interesting one because there's kind of this, the currency wars narrative that's going on, which is between obviously the United States dollar, Bitcoin, the yen, and the euro's not really in that conversation, but it should be. And then also the ruble, the digital ruble, which is kind of seen as like it could potentially overthrow the petrodollar eventually. And I mean, very eventually. It would take a lot of work for them to do that, but it looks like they're postponing on that. And I would say they probably are going to postpone this indefinitely because it was doomed to fail. They needed China to throw their full weight behind this, and it doesn't look like China is going to be doing that. So this is a hurrah moment for Bitcoin. This is kind of like the enemy of an enemy, but it is still an enemy. It's still a competitor for if you're in the camp that you want Bitcoin and Ethereum to be the world reserve currency function de facto, then this is a victory. If you just want to see the United States dollar crumble, then this may not be a victory because you're having the enemy of the USD lose right here, or at least show major signs of structural instability. Moving forward, just interpreting that currency wars moment for you. Elon Musk and tech executives call for pause on AI development. The authors of the letter say that advanced artificial intelligence could cause a profound change in the history of life on Earth for better or worse. So not going to get into the details on this one, guys, but I mean, it's all kind of in the title. And I want to quickly throw it to Tim and Piper. Piper first. Do you think that AI is a threat or a friend?
Loading in the bro cam here. We're going bro cam. I think AI has a lot of, it's like, let's look at the atom bomb. Okay. New technology came in, absolutely destructive in the wrong hands. Very bad thing. But the nuclear age absolutely had a lot of benefits. I think AI, there's a lot of things that we can benefit as a society and technology and development and growth. And, but in the wrong hands, it can absolutely do some bad stuff. Like, the deep fakes are pretty realistic looking. Imagine what that could do to politics or even geopolitical relationships. Just a wrong video of, we caught, the president of France saying this about the president of the prime minister of the UK. Like anything good can always be twisted by bad people. So.
Tim?
Yeah, my only thing to that is there's AI. So this is a story we joked about a while ago, was that there's AI that can spot AI, meaning if with those deep fakes or things like that, they're creating AI that will expose that and say that is a fake. Now you have the thing is like, do they twist it? Do they start programming an AI to call real videos fakes? And now they're trying to promote, different things. It's a whole war. The thing is, AI is dangerous. AI can be very, very dangerous. My two concerns with this story, though, are when you tell everyone to stop, the only people that listen to stop are people that follow the law and people that have morality. There's a lot of people out there that do not. And when you pause the good people and you allow the bad people to continue to work on their projects because they don't follow laws, they don't follow rules, they don't care what other people think, now all of a sudden you're just giving a head start to the enemy. And that's got like weapons. I mean, Army Piper brought up weapons. Imagine if at one point during weapons, they announced like, hey, everybody, stop innovating and making better weapons. We're not really sure what we're doing with this. Guess what? Every single good actor is going to stop, and every single enemy, every single bad actor is going to say, screw you. I'm going to continue to build weapons, and I'm going to get the edge now while all of you guys are paused. I'm going to keep building my better ones. So it's one of those things like we opened up Pandora's box. You can't just close Pandora's box. If anything, we need the good players continuing to innovate and make better AI for protection, which is why I'm a little surprised Elon Musk is on this list of people saying that we should stop this. Elon, better than anyone, would understand there's a lot of bad players out there. And one of his goals with his AI development is to make AI that's better for individuals before governments use AI to kind of track and restrict individuals. We need people like Elon to continue to work on his AI systems. Because at least at this point, it looks as though he's a better actor in the field.
Yeah.
We know that the bad players are not going to stop.
Yeah, and the way I settle on this is it's kind of like Balaji's recent prediction of Bitcoin going to 1 million. You have to be black and white when you're dealing with the masses, right? You have to be black and white. You either say it's going to 1 million, it's going to a 0 when you're trying to aspire to that level of thought leadership. Elon is already there by a long shot in terms of thought leadership. He is thought leadership in our day and age. But it's also Steve Wozniak who signed on to this, and other founders, including a CEO of an AI company. And I think that in the sense they're just being black and white here. Obviously, they don't think that AI should be shut down altogether and that we should just forget about it as a technology. Tesla uses AI, right, in their cars. But what we should do is be very, very cautious. That is the black and the white. That is the binary of it. You have to really think about this stuff very clearly if you're going to try to convince a large population of the electorate, right, of voters. And Elon Musk is just trying to go ahead and plant the seeds for people to understand there is some bad things about AI. And Marvel has also helped out with that with some of the Avenger movies. All right, I will point out. But all right, let's get into our thumbnail story here. The SEC's Gary Gensler seeks $2.4 billion in funding to chase down crypto misconduct. Will he get it? And is he teaming up with Biden here? Let's get into the details. In prepared testimony for the March 29th budget hearing with the House Appropriations Committee, Gensler said the additional funding was needed to keep up the pace of innovation. He said, so regulatory funding for the sake of innovation. Interesting. The additional funding would allow the SEC to hire 170 additional staff, most of whom would work within its enforcement and examination divisions, said Gensler. But it doesn't stop there. He also said, as the cop on the beat, we must be able to meet the match of bad actors. Thus, it makes sense for the SEC to grow along with the expansion and increase complexity in capital markets. Okay. So Gary is really making his opinion known here, but it doesn't stop there. According to Gensler, the regulator received more than 35,000 separate tips, complaints, and referrals from whistleblowers and others in the forward year 2022, which helped it bring more than 750 enforcement actions and resulted in orders for $6.4 billion in penalties and disgorgements. 30 of these actions were related to the crypto industry, which resulted in $242 million in monetary penalties and represents a 36% increase over the 22 actions announced in 2021. Okay, so there's a lot of details in there, guys, but overall, what is this saying? It's essentially saying that, and one detail that I accidentally kept out was that United States Securities Exchange Commission Chair Gary Gensler has thrown his support behind U.S. President Joe Biden's request to allocate a record $2.4 billion in funding for the regulator, highlighting the ongoing need to crack down on misconduct in the crypto industry. So Biden and Gary here seem to be kind of banding together to produce some funding to hire new staff over at the SEC to clamp down. Now, here is the thesis that's kind of brewing in my mind, and I want to get your take on this, Piper, and I want to get your take on this, Tim, as we're up against 10 o'clock here. But the thesis is this.
We'll run a little long, just a little bit.
Is that Bitcoin has been said by Gary Gensler several times that he's claimed that Bitcoin is actually not a security, right? He's kept it in that non-security classification multiple times on multiple occasions and in multiple press briefings, right? But everything else, including Ethereum, Ethereum's kind of in that gray area, but pretty much everything else, all of your favorite alts, he wants to label as securities, the majority of them. Now, there might be some exceptions for things like Litecoin and Dogecoin that don't seem to have centralized authorities around them at all. But for the majority, speaking in black and white here, Gary is teaming up with big government, with Biden, to try to shut down altcoins. But in the meantime, that funnels dominance into Bitcoin. So, Tim, I want to throw it to you first. Is this something that, what should the crypto community think about this? Is this something that crypto maxis are going to freak out about and be very bullish about? Is this something that we should be on the side of, hey, maybe this isn't such a bad thing? Or is this something we absolutely should be concerned about and taking action to try to go against as voters?
Let's go with the bro cam here, Piper. First thing I'll say, this just continues the FUD narrative that everything is crypto's fault. Crypto is to blame. Crypto is what crashed the banks. Crypto is really evil. Don't trust it with your money, yada, 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 yada. This $2.4 billion, if we're going to spend it, I don't think we should be spending more money right now as a government when we already have a major debt problem. But let's say we do need to spend $2.4 billion on regulation. It looks like we might need to spend $2.4 billion regulating banks. A little more than crypto. I'm not saying that no regulation needs to happen to crypto. It's time for regulation in crypto, but this is just more spewed narrative of everything is crypto's fault. Traditional finance is great. Banks are resilient. They're safe. And in reality, they're just not. The answer is they're just not. I think there's a report. I know we don't have time to cover it, but there's a report, I think this morning, from somebody working with inside the SEC who said that when looking at all of this, banks are not safe whatsoever. The regulation has been very, very sloppy. Crypto is not to blame for these bank failures. Whether crypto exists or not, these banks are going to have these problems because these problems stem back to things from 20, 30, 40, 50 years ago. This isn't like, it's not even like, I know a lot of people blame the pandemic and say, oh, we're in a problem now with pandemic. Guess what? The pandemic was just icing on the cake of a problem with the current banking system. And they're going to continue to sugarcoat it. They're going to, I've said this on a different show. When there's horse crap in the kitchen, you can try to, spray aromas and you can light a candle and you can cover up that horse crap, but it's still horse crap. And that's what's the problem with the banks right now. So I'm just watching this, very, very surprised. Like, man, I'm not surprised. This makes sense. They're going to continue to spew this crypto FUD. Another interesting thing, I know they're doing this for a lot of people, but $2.4 billion for 170 people, a lot of money. Let's say it was going to all of them. Each one of those jobs, each one of those people are going to make $14 million.
One thing I'll point out in the defense of Gary and Biden, which they need so much defense here, but is that it's probably over a period of 10 years that funding is getting allotted to. Just it's not all just one day.
I realize that. It's just funny. And it's just one of those things. Again, they're going to hire another 170 people to look at crypto as if crypto is the problem. It's like, no, we need 170 people looking at banks and traditional finances. And another thing is, like, I know we mentioned this in the title. I don't know if because Gary's driving when it comes to Bitcoin dominance. I think Bitcoin dominance is happening because that's what Bitcoin is. Bitcoin is a very, very good solution to the monetary problems. He's not necessarily fighting Bitcoin tooth and nail, but even these lawsuits against, when he goes after Binance and he goes after Coinbase, he's in a way going after Bitcoin as well. He just knows, like, he's holding on to the delusion he could still take down XRP and Ethereum and Cardano and proof of stake. He's smart enough to know, I will lose my first day in court if I go after Bitcoin, but let me go after it in a different way. So I don't think that Bitcoin dominance is growing because of Gary Gensler. I think it's growing in spite of him, and that's all the more reason to be bullish. I know we're a little long here, but I do want to hear what Piper has to say as well.
I think the key part in there was the quote where you said, well, Gary Gensler said, when you're the cop on the beat. And that therein lies the problem right off the bat. Your job is not law enforcement. Your job is regulation and policy making. And the problem that you have is that you want to sit in your seat and be the cop that goes around and arrest everybody for doing the wrong thing when you haven't even told them what the wrong thing is. How about you focus on being a regulation agency and a policy agency and quit trying to be something that you're not? Do your job or get out of the seat. How about we take the 170 jobs there and we make it 171 and get rid of you? So
exactly.
Very clippable take there, Piper. Very nice.
Yeah. Well, everybody, that is all we have for you guys in this episode. I see in chat someone said audio was a little choppy there. We'll make sure we get that fixed. But that is all we have for you guys in today's video. Thank you for sticking with us today. This is the Investing Bros, the most generous community in all of crypto. We got a big announcement coming next week that you guys definitely want to hear because, again, we haven't gotten to talk about this recently, but we do seek to be the most generous community in the world, and that is going to be something that no matter how small or big we grow, that statement will always be true. We will see all of you guys tomorrow for the last ever 60-minute show for the Investing Bros. That's probably not true. They're probably from time to time will be only a 60-minute show, but the last one planned. And we are joined by Crypto Archie, a degen specialist. You do not want to miss it. We will see you guys tomorrow. You guys have a great day.